we've got an earnings alert on Uber. Shares are soaring after reporting results. They're up almost 9%, and this after an 11% gain in the regular session. Let's get to Deirdre Bosa with the details. Deirdre.
Hey, Melissa, shares turned positive as the call kicked off. Here's what CEO Dara Khosrowshahi said to turn them around.
I want to talk about what we're seeing in our rides business today, and I won't sugarcoat it. COVID-19 has had a dramatic impact on rides, with the business down globally around 80% in April. Still, there's some green shoots driving restrained optimism. We've seen week-on-week growth globally for the past 3 weeks. This week is tracking to be our 4th consecutive week of growth. Last week, we saw 9% trip growth and 12% gross bookings growth globally.
Now, he also said that he believes the U.S. is now off the bottom. Still, guys, net losses were pretty breathtaking, $2.9 billion in the quarter. But remember, Uber has been burning through billions of dollars for years. The shock may have worn off. It's the promise of profitability that investors are focused on. And Khosrowshahi said that profitability remains a strategic priority. And, quote, COVID-19 will impact our timeline by a matter of quarters and not years. We will hear more from him tomorrow morning on Squawk Box. Back to you, Melissa.
Deirdre, just to be clear, he said profitability by 2021. Isn't that correct? Was that the prior promise as well?
He actually moved that up to the end of this year. He didn't say whether or not that remains intact, and they have withdrawn their guidance for the year total. So the best indication we have now is him saying quarters, not years, but that initial target was by the end of this year. Lifts is next year.
Okay, Deirdre, thank you. Deirdre Bosa. Interesting guy to think that you can suspend your guidance but still have a projection for profitability. To me, I'm scratching my head.
Especially in the current environment that we find ourselves in, when nobody knows what the world's going to look like, a week from now, let alone, 6 months from now, let alone a week from now. I don't know how to sort of gauge this. Uber added probably, $7 billion in market cap today on the back of his, Deirdre just said, a $3 billion. It's remarkable, but that's the market that we find ourselves in. And I think that's why a lot of people, myself included, find themselves scratching their collective heads. We played the game last night, Would You Rather? I'll play it for night 2 once again. I would still rather Lyft. But, the move today in Uber, both during the day now and the post-market, is, again, to use the word, remarkable.
You're forgiven for the Would You Rather. Dan Nathan, I'll go to you because it looked like in the quarter you could actually see the other businesses really firing, namely Eats, for instance. It's showing its strength in its other ancillary businesses.
Yeah, no doubt about it. Listen, there was clearly a dislike for that business and the money-losing aspect of it prior to the pandemic. Obviously, it's nice to see them have some other levers to pull when their rides business is floundering. It is astounding to me that this stock is up on the year right now when you consider that there's going to be some serious behavioral changes, how consumers kind of interact with this service going forward. That being said, it's pretty nascent if you think about it in the grand scheme of things. So, the ride stuff is going to be around for a while. The Eat stuff is going to be around for a while. The thing that we were just told, though, about the profitability, I'm with Guy here. They have a mulligan. Why put it out there? I think you could kind of keep this thing as kind of opaque as possible in the meantime, but I just don't know. I would not be buying it after the 2-day run it had.
All right, let's get more reaction to Uber's quarter. Loup Ventures' Gene Munster has been listening in on the company's call. Gene, I'm going to just start off right there. The CFO said profitability in 2021, and yet they pulled guidance for the rest. It doesn't make any sense to us. Yeah, does it make sense to you?
Does not. I don't know where that confidence comes from. I think it's potentially leading investors in a distant direction. And this quarter is not as clean as it looks with the up 10%. I would caution, yes, Uber Eats is on fire. It's now 30% of bookings, up 54%. That is a good thing. But Eats, as Dan said, that loses money. And so they're losing money, and they're more money than their other business. They burned cash. They went from $11.3 billion to $9 billion. Keep in mind that Lyft's cash was flat quarter on quarter. They talked about $1 billion in cost savings. Now, Lyft yesterday talked about $500 million in cost savings. But when you compare the different sizes of the platform, the fact that Uber's 4 times bigger, Uber would have had to said that they have saved $2 billion to be comparable to Lyft's $500 million. They lost market share. Rides are down 5% year over year. The bookings were up 23% for Lyft. And so I think that this is quite perplexing. Not only the comments about the track to profitability, no company has any visibility beyond probably a week at this point. But what I think it really speaks to, this move in the stock, is just investors' appetite for good news. It's just we're so much looking forward to that. And so when he talks about some of the improvements in the previous weeks, I think it gets a substantial weighting. So when I put this together, they've done a good job, but this is still a company that is going to have a lot of moving parts. One last thing just on Eats that your viewers should keep in mind too. We talked about the fact that this loses money more than a typical business. Is they have about 20 or 25% share in the U.S. DoorDash is the largest with 40 or 45% share. We don't talk a lot about DoorDash because it's a private company, but ultimately is that this is a really competitive business. Again, I did this yesterday. I applaud Lyft for not going after something shiny here and trying to get into that business. I think it's a trap.
Tim, you got a question?
Hey, Gene, what do you think about 31 million Uber rewards? What do you think about the relationship that they're touting of 46% with Fortune 500 companies? Are these parts of the foundation of the business, though, that give you more confidence and stickiness in an uncertain environment?
It's good, the rewards, the relationships that they have. Lyft has similar types of relationships. I don't know what the percentage is, but it's similar. I think that ultimately there's probably a bigger question at play that is not generally talked about here beyond the rewards and beyond the current numbers and all of the noise in the numbers, is that we've talked a lot about one of the key questions is around safety. You know, that investors are thinking about the safety aspect of owning your own car versus public transportation and how that's going to impact ride sharing longer term. I see a more fundamental question just around behavior and how we think about transportation in the future. So, for example, if we work more from home, if we travel to the airport less, that was 9% of bookings for Lyft. If we have more groceries delivered to our home and don't use a ride-sharing service to get there, to me, that's probably one of the most underappreciated questions here. Incredibly difficult to answer, but that question about how has everything that we're going through with the pandemic accelerated this future, and does this future include people just simply not moving around as much?
Gene, great to get your take on this. Thanks so much for your time. Gene Munster of Loup Ventures. Karen, I mean, when Gene said Lyft gets 9% of its revenues from trips to the airport, and to take a look at how airlines are doing and the decimation in terms of the flight schedule and what expectations do we have for even that to return to normal, for people to want to get to the airport. I mean, the ripple effect is just amazing.
It is. I mean, that's a big number, 9%. I think you're exactly right. How do you have guidance when, you know, everything's so obscure? We have no idea how well the recovery will go. I guess they have some guidance on their ability to cut costs, but I don't understand. I don't know if it was Gene or you said take a free pass. If you get a quarter for a free pass on guidance, this is it. I don't know why they felt the need to really give that. It is hard to understand how they have confidence in that. Well, they did say, though, quarters, not years. Maybe it's more than 4 quarters. I don't know. I don't know how many quarters they were talking about before they break even. I don't know, but I completely agree with you. I don't understand how that makes sense.